Yeah, good morning, everyone. So we saw yesterday US market again bouncing back ahead of the event, which indicate that the people are confident of positive commentary from the Fed. In fact, that positiveness come from the energy prices, which has corrected in the recent past, specifically gas prices and coal prices. Coal prices has corrected in last 2 months substantially and come to around 140 $45 against $250. And similarly, gas prices also in that part of the country has reduced substantially and coming back to near to the pre-COVID levels. So that is again having a multiple effect on the other part of the business, other part of the commodity, and accordingly, people are feeling that the going forward the inflation can come off sharply, though oil continue to remain at a higher level. So, though futures of the US are marginally down today, and in Asia also, what we are seeing that there are a mixed bag. Some of the countries are showing some negative trend, but most of the other countries, Korea, Australia, New Zealand, are showing positive trend in today's morning trade. On the commodity side also, oil remained flattish at around $85.5, and we are seeing some weakness in the HRC prices in China today morning. HRC steel prices are down by around 1.5%. Iron ore is flat. So overall mixed bag, and today we will be driven by the event of the budget. And yesterday we saw FPO of Adani Enterprises, which was a hangover not only for the Adani Group or even for the market as well, has come off. So that is creating some positive trend for the Indian market. And also, if we come up with some positive news from the budget, then the market can find some support in that direction. FII continue to remain negative, so one need to watch that as well. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Yesterday we saw that market trading in range in volatile session and close minor gain. Today we expect gap up open and remain a volatile during the day due to union budget. Nifty immediate resistance place around 17 for 750 and 800 in upside. If Nifty managed to close that level and break that level in first session, then we expect further rally towards 18,000 and above that level. But downside immediate support place around 17,550, 17,440, 70. That is range for Nifty is coming few trading session. That is downside 17,470 and upside 18,000. Bank Nifty, we saw that yesterday is a positive pullback and it will be continue to today also. Next immediate resistance place around 41,300 and above 41,300. Next level towards 41,600, 41,700 in upside, and support first support place around 40,800 and 40,640 at downside. Nifty Finance, the next immediate pivot level is 18,100 and 18,170. The next immediate first resistance level, and support place around 17,980. In stock specific, NTPC looks positive. Yesterday we saw that trading above the long-term average and managed to close above the 170 level. Do we expect it will go up to 180, 182, and downside immediate support place around 166, 165. Second, Mahindra and Mahindra looks positive. We saw that yesterday's buying momentum in Mahindra and breakout also. So we expect it rally towards again 1450, 1417 upside and support place 1320. Titan also looks positive at current level, already trading oversold zone. So we expect downside is limited. So downside first immediate support place Titan is 2320, 2300 at downside. Upside 2500 and 2520 in upside. Next immediate resistance that is 250 DMA. So we expect positive momentum in force stocks. That's it for technical derivative guy can carry.
Yeah, thank you, Vikas. On the derivative front, see, again, I said yesterday, it was a range bound day. Now, today is likely to be very volatile. However, from the open interest profile, there's nothing much that comes out. Also, 17,500 is a support level. It is a very important support level. So, if this breaks, you might see further selling coming in Nifty, while 18,000 is an important resistance on the upside. If that breaks, you will see further buying coming in. So, all in all, these two levels have to be watched out for, and there are chances that there can be either side break for Nifty. There are more chances right now, at least, of breaking the upper band, 18,000 levels. The highest open interest call base also for calls is at 18,000. So there can be heightened buying once that is broken above. VIX has come down, because today was the event, the VIX had gone up. And now as the event approaches, VIX will ease off, cool down, and it can come down below the 15 levels again. And VIX coming down below 15 and a break above 18,000 would mean a strong buying in Nifty and in the stocks, and that can be a very big positive. So look out for the same. There is one thing that I'd like to highlight is the FIIs have continued to sell, and they have been big figures, more than 5,000 crores in the last 10, 12 days, almost, every day they have been selling above the 3,000 to 5,000 level mark. And it has gone unnoticed at this point because we are holding on. But that is not a very good sign, actually. However, once the figure turns, once you see, FIs come into the buying figure, that can also help the Nifty move up. So all in all, there are good chances of a buying breakout coming in soon. From the stock specific front, uh, see, lot of stocks and sectors have been doing well, and one day they do well, next day they see selling. So a lot of PSU stocks witness buying. They have been consistent, where consistently you're seeing good buying coming in most of the PSU stocks. So first banking went up, then the other sectors. So at this point, oil and gas sector looks good. So ONGC, IOC, BPCL, these sectors, these stocks can witness good amount of buying, coming in. There good open interest built up, even Coal India. So look out for the same. They might witness, good buying. Also, the metals, PSU stocks or the metals, like SAIL, NMDC, National Aluminium, they can do very well, especially SAIL. A lot of longs have been built in, and it can witness a good breakout and a good move, from current levels. So look out for the same. Yeah, that's it from my side. I like to have the fundamental team to take over, please.
Good morning. Apar Industries, the capital goods player, result is above expectation on all front. Revenue grew strongly at 77%. Conductor and cable division posted strong volume growth, and management has guided that growth will continue through FY24 as well. Almost half of the revenue are from exports, which are growing faster than domestic and have better margins. EBITDA margin also came higher at 8.8% against expectation of 7%, and year on year just 5%. Higher share of value added products Exports combined with lower commodity costs and freight costs help the margins. We are positive on the stock, and we think that even in the short term, APAR Industries can do well. Cholamandalam Investment and Finance result is above expectation because of lower credit cost and uh, lower NPA and also strong loan growth. NIM was stable at 7.6%. Credit cost came at just 0.7% versus a normal run rate of 1.5% since last few quarters. And also AUM growth accelerated 9% sequentially and 31% year on year. And even net NPA reduced from 4.1 to 3.7%. So overall, good set of numbers from Chola. We are positive on the stock. Spandana Spurti financial result has improved on all fronts as well. NIM came at 13.8% against 13% last quarter and single digits in FY22. Net NPA saw a good decline to 2.5% versus 4% as company sold stressed loans of 323 crores to ARC. ROA came at 4.5% against sequentially 3.8%. And ROE, however, ROE is still at around 9.8%, seems lower because of higher capital adequacy ratio of 39%. So looking at the ROE of 4.5%, this is almost close to the best in class of credit access. However, the ROE still remains low. So overall, it should command some discount to credit access, but still stock we feel is trading very cheap at 1.3 times trailing price to book. So somebody who has risk-taking ability and invest in MFI space, then they can look at this stock. We think it can re-rate to 2 times. So we are positive on Spandana. Star Health and Allied Insurance result has improved. GDPI, that is gross direct premium income, grew by 14%. Combined ratio came at 94.8% versus sequentially 97.9%. So a decline in combined ratio is seen as positive for the company. Retail health market share was maintained at 33%, so that was stable. Stock is trading at 4.4 times trailing price to book, and we are positive from long-term point of view. Max Financial Services result is above expectation. Although APE declined 5% year on year and company lost market share, but on the VNB front, that is value of new business, came at 593 crores against expectation of 438 crores and year on year 586 crores. VNB margin came at 39% versus year on year 25% and sequentially 31%. So the big beat in margin was because of higher share from non-par mix, where the mix was at 42% against last year 28%. So from long-term point of view, we remain positive on Max Financial as well. Thank you.
Good morning. KPI Technologies reported its numbers, and the company has posted above expectation numbers for the quarter, with dollar revenue coming in at $110 million versus QOQ of 94 million. Higher revenue led to higher profitability to the company. For FY23 last quarter, the company had guided for a growth outlook of 31 to 32% with organic growth outlook of 23%, and EBITDA margins is expected to be in the range of 18.5 to 19%. This quarter management indicates the company is on track to beat FY23 growth outlook. Stock is trading at a PE of 44.3 times FY24 EPS. Outlook is positive. TCI Express has posted below expectation numbers majorly on the margin front. Although the revenue improved, however, margins dipped to 14. Operating margins dipped to 14.7% versus QOQ of 16.6%. Stock is trading at a PE of 31.9 times FY24 EPS. Thank you.
Yeah, good morning. ACC reported inline set of numbers. Volume increased by 12% sequentially at 7.7 million ton, supported by an increase in blended cement. The fuel cost reduced by 18%, mainly due to change in coal basket, improvement in coal procurement, and higher use of alternate fuel. Lead distance reduced from 307 kilometers to 292, and higher dispatches through rail helped to reduce logistics costs. EBITDA per ton stood at 491 versus expectation of 460 and sequentially at 23. Increase in blended cement, better logistic planning, and higher operational synergies with the parent led to a higher Q-on-Q jump in EBITDA per ton. Jindal Steel and Power Limited result was in line with expectation. Sales volume stood at 1.9 million ton, which declined by 6% Q-on-Q, driven by 48% decline in exports. Domestic volume were also marginally down by 1% due to issues around rake availability and dispatches. Realizations were down by 1% Q-on-Q as the pricing remains soft. However, at present, realizations are marginally up by 1 to 2% and are expected to be better in Feb and March. With the removal of export duties, management is seeing robust improvement in the order book. Volumes are likely to remain stable in Q4 and might see an increase of 0.25 million ton. Once the debottlenecking of overseas mines are completed in June, company will be self-sufficient for its coal requirement and reducing the cost volatility. So we are positive on Jindal Steel. Coal India Limited result was above expectation. Offtake came in at 176 million ton versus 155 million ton sequentially. Realization stood at 1843 versus 1888 versus 1782 sequentially. Realizations were better due to better pricing under FSA and higher premiums under e-auction. EBITDA per ton stood at 591 versus expectation of 543. The share is trading at EV by EBITDA of 3.3 times FY24 earnings. Thank you.
Good morning. Godrej Consumer Products Limited announced results, and results were above expectations. The revenue grew by 9% YOY at rupees 3,599 crore, where home care and personal care segments grew by 10% and 14% respectively, while unbranded and export segment degrew by 9%. In terms of regional performance, India grew by 11% YOY, and Africa and USA and Middle East altogether grew by 14% YOY. However, there was a degrowth observed in Indonesia by 3% and Latin America and SAARC by 8%. EBITDA margin came at 21.3% versus the expectation of 19.8%. The stock is trading at a PE of 42.6 times to FY24 EPS, and the outlook is positive over the long term, where the management expects recovery in the regional performance on the back of volume growth. The Blue Star Limited results was broadly in line with the expectation. The revenue reported at 1,788 crore, which grew by 18.7% YOY. Here, the electromechanical projects and commercial air conditioning system segment grew by 20.5%. Unitary products segment grew by 15.1%. The professional electronics and industrial systems business grew by 29%. And there was a slight margin improvement across electromechanical projects and unitary product segment. However, there was a degrowth in margins in professional electronics and industrial systems. The overall margin, EBITDA margin, came at 5.9% versus the expectation of 6.4%. The stock is trading at a PE of 33.5 times to FY24 EPS. UPL Limited result was broadly in line with the expectations, where the revenue grew by 21% YOY at rupees 13,679 crore. The global crop protection business grew by 22%. Advanta Seeds business of India grew by 31%. And Indian AgTech platform remained flat despite unfavorable market dynamics in India. However, management is looking for the good growth in Rabi season. The global crop protection business, except Europe, reported double-digit growth, where the America growing at robust traction at 30% growth. The euro business grew at 3% YOY on account of currency devaluation, product bans, and unfavorable weather over there. And EBITDA margin came at 22.2% versus the expectation of 22.6%. The overall margins marginally contracted due to higher SG&A expenses in Q3 FY23. The company is guiding for the revenue growth of 12% to 15% in FY23, with the EBITDA growth of 15% and 18%. The stock is trading at a PE of 10.1 times to FY24 EPS, and the outlook is positive on the stock. Paradip Phosphates Limited result has improved for the quarter. The reported result was including the effect of acquired business of Zuari Agrochemicals Limited, hence not comparable on a YOY basis. However, the revenue grew by 53.6% on a sequential basis at rupees 4,398 crore. The EBITDA margin came at 8.5% versus 6.3% in the last quarter. The stock is trading at a PE of 15.5 times to TTM EPS. We are going to listen to the con call today, and we will provide the update and will give the outlook based on the con call highlights. Thank you.
Yeah. Yesterday, Indian Hotel announced the result, and the results were above expectations, mainly driven by the ARR, that is room rent. Whereas if we compare it with 2000 FY22, the occupancy was marginally lower as compared to pre-COVID level. But the main driver were room rent, which has moved up very sharply in recent past, and that is driving the profitability of the company. Going forward from here, what we see that since the occupancy is now stable and reached to pre-COVID level, the supply of the room is a bit higher than the demand. Quite possible that we may see some pressure on ARR in the recent near term, and which can have some stagnations in their profitability. Going forward from here in the next year, there are two big events which are going to happen. That is G20 meeting, which will be happening in India. So that will drive the demand for hotel. And also ICC ODI cricket, which will be happening in the next year. So that will again drive a lot of demand for the hotels. So in that perspective, outlook for the next year is positive. But the near term, we feel that the stock can remain sideways. I'll request commodity team to take up from here.
Yeah, thank you, sir. Good morning, everyone. In today's session, we expect some range-bound move in commodities. In gold, one can expect prices the supportive at 57,000. So it is recommended if 57,000 comes, then you can long for trading purpose. However, on upside, 57,400 seems to be a resistance area, so there could be some range bound movement in gold from 57,000 to 57,400. Silver too is in a range, upside resistances at 6,900. 69,000. So all in all, it looks like but it should trade in a range from 68,000 to 69,000. Crude oil, we expect prices to edge higher and test 65.50, 65.70 on higher end. So buying is recommended around 64.50, and one can maintain a stop loss of 63.80 natural gas today seems to witness some pullback uh, after this correction. So there are chances of reversal. So buying for a pullback till 250, 255 is recommended, and one can maintain a stop loss of 218 or 215 for a position trade. In metals, copper 783.84 seems to be a area where one can buy for the target of 788, 790. Fresh buying could be witnessed above 790. So at present, 790 to 783 seems to be a range zone where it should trade. Uh, in zinc, we recommend to go long at the current price and maintain a stop loss of 280, sorry, 295. And on upside, 300, 300 and 301 could be the ideal target. That's it from me. I'll ask Riya to take over from here.
Thank you, sir. Good morning, everyone. So, rupee, after testing the highs of 82.19 in today's session, has opened with a little on a weaker note at around 81.90 and trading sideways. The pair will hold the support of 81.60 going forward, and we could see a bounce back again towards 82.25. So, look for a breakout of 81.98 to go long into the pair. However, today the volatile it will rupee can witness a volatile session on the back of the budget, and of course we also have. Will also start with the central bank's policy meet. So this week will be a very volatile one for the Indian rupee. So take a position with the strict SL. As far as other pair is concerned, for JPY INR, we are seeing a volatile open as well. We are seeing a volatile open as well at around 60. 3.23. The pair, if opens above 63, the pair, if trades above the level of 63.28, can further continue the green momentum towards 63.50, 63.65. So look for a breakout of 63.28 for going long into the pair. Euro INR is also witnessing some pullback and trading at around 89.02 from the previous close of 88.86. So for I think in today's session we could see some pullback into the Euro INR as well, because ECB will definitely go for a rate hike. So you can go long in the pair above the level of 89.08 towards the for the target of 89.25 with an SL at around 88.88. Pound is most likely to continue with its sell off towards the level of 100.64. So look for a breakdown of 100.78 for the target of 100.64, 100.50 with an SL at around 100.85. That's all on the currency front. Thank you.